In this video, you will learn about the sections of the PSID 2021 questionnaire related to expenses, income, wealth, and retirement plans. After you complete the employment questions in Section BC, you'll arrive at Section F. The general topics covered in Section F are time use and housework, family care, food stamp use, food costs, vehicles, transportation and education expenses, and household expenses. The initial questions on time use and housework are straightforward and are repeated for the reference person and spouse partner. After that, there are some questions on childcare and elder care costs. These questions will only come up if there are people on the family listing who fit into certain age ranges. Remember, in all these questions, we're looking for answers that cover the FU people only, not anyone who is HU or HUCS. Be careful about the time reference of the questions, and make sure the respondent knows which year the current question covers. After the food stamp use and food costs question, there is a question sequence regarding vehicles. First, we ask for the total number of vehicles the FU owns. Next, we ask for the make, model, and model year of the three newest of these vehicles. Our definition of vehicles does not include motorcycles or motor homes. Finally, the application will take you through a long series of questions about vehicle purchase or lease costs. These are asked about vehicles leased or purchased in the previous 2 years. After the vehicles section comes a series of questions about transportation and education expenses. We ask for the expenses in the month prior to the interview month. If you're doing the interview in June, the application will ask about expenses in May. Be sure to check that your respondent understands the time reference for these questions. The last topic of Section F is household expenses, which covers home repairs and furnishings, clothing, vacations, and entertainment. The information we collect in Section G represents some of the most important and most frequently used data in the study. New this wave, the first part of Section G consists of a series of questions about the financial impact of the COVID-19 pandemic. It includes questions about any financial difficulties experienced, layoffs and furloughs that occurred, and if anyone worked as an essential worker or worked from home. The questions in Section G that follow the new COVID-19 items represent some of the most important and most frequently used data in the study. Let's walk through some basic PSID income concepts, as this is another section that you'll make decisions about the best way to record information the respondent gives you. Respondents don't always know what we're looking for in particular questions, so it's very important that you understand the concepts. All questions in this section refer to income received in the previous calendar year. The PSID divides income into 3 general categories: labor or earned income, asset income, and transfer income. Labor income is money received as a result of a person's work, for example, wages, salary, tips and commissions, bonuses or overtime, professional practice or trade, and farming or market gardening. Asset income is produced from one's financial resources, for example, savings account interest. It is different from labor income because it involves no work by the recipient. Time spent managing one's stock portfolio does not count as work. Examples of asset income include savings account interest, trust funds, royalties, dividends, and rent from someone outside of the FU. The third type of income, transfer income, is any money received that is not based on work hours or one's financial assets. Examples are welfare, Social Security, pension payments, unemployment or workers' compensation, annuities, IRAs, food stamps, TANF, Temporary Assistance for Needy Families, SSI, Supplemental Security Income, child support or alimony, help from others. Sometimes money a person receives does not count as income at all. Loans are never considered income of any kind since they have to be repaid. The Q by Qs include definitions, examples, and clarifications. After asking about the reference person's income, we move on to questions about the spouse or partner's income. You'll notice that these questions are not split up into as many categories as they were for reference person. For instance, there's only one question for all his or her labor income, not separate ones about bonuses, professional practice, and so on. We collect this information differently, but we still want all of their income information. In some cases, it's hard for married couples to separate out income from certain sources such as interest and dividends. When you go through the reference person's income questions, if there is a spouse or partner in the FU, questions will come up asking if the interest the reference person reports, for example, includes the spouse's share. The final part of Section G is about the income of other family unit members, or OFUMs. The questions ask about income for the previous year only, so they only come up for OFUMs who were in the FU at the time, whether or not they're still there. Many of the OFUMs will be children, but any adult FU members beside the reference person and the spouse partner will also go through an income question sequence, including a reference person or spouse partner who moved out or died. A slightly different set of questions is asked depending on the OFUM's age. For those who are 16 and over, the sequence begins with employment status, using the same categories as you saw earlier for the reference person and spouse partner. Then we ask how many jobs that person had during the previous year. Next, we move on to the asset and transfer types of income that the OFUM may have had. Next, any OFUMs who are between the age of 16 and 49 will be asked a couple of education questions. The income sequence for age 15 and younger OFUMs is less detailed, since we don't expect them to have a complicated job record or certain types of income such as unemployment compensation. Again, we still want to hear about all their income. For a complete picture of the family economics, we also need to know about the financial assets the family has accumulated. We ask questions about this in the next two sections of the questionnaire, W, which covers wealth, and P, which covers pensions. First, we'll focus on wealth. The general aim of the wealth section is to get a picture of the family's net worth. To do this, we have to ask about the assets they've accumulated, but also about their debts. Net worth is the amount of assets left over after you subtract the debts. Section W is organized fairly simply. First, we ask about the family's current assets of various sorts. Then about debts of various kinds. Following this are some questions about changes in the family's wealth picture since the previous interview. This section does not have difficult concepts, but it does have some financial asset terms which you may need to define for your respondent. So you should familiarize yourself with the information in the Q by Qs. For each asset or debt we talk about, there is a question about whether they have that asset or debt, and then a question asking for its value. In order to get the best data in this section of the questionnaire, we make extensive use of a feature that you've seen a few times before, unfolding bracket questions. So we want you to be familiar with the way these questions work. We use them to help the respondent narrow down an estimate. They are triggered when a respondent answers a question, don't know, or refuses to answer. The next question will then suggest an amount. For example, would it amount to $10,000 or more? If the answer is yes, then we ask a higher amount, $25,000 or more. But if the answer was no, we'd ask about a lower amount, $5,000 or more. The particular amounts we suggest are different in each question, depending on the type of asset or debt we're talking about. If at any time during these unfolding bracket questions the respondent says, "I don't know," again, the bracket questions will end and the application will move on to the next question topic. We ask about current assets, including the value of any other real estate they may own, the value of anything they own on wheels, and whether they own all or part of a farm or business. In all three of these cases, real estate, vehicles, and farms or businesses, we want the net value. That is the amount they would get for it if they sold it and paid off any money they owed on it. Other assets that we talk about include stocks in publicly held corporations, mutual funds or investment trusts, funds in private annuities or individual retirement accounts, IRAs, liquid assets such as checkings and savings accounts, savings bonds, money market funds or CDs, and any other savings or assets. After the asset questions, the application moves on to debts. This part is easy because there's just one question. The respondent will already have told us about any mortgages on a main home or any vehicle loans. Here we want to know about any other debts, such as credit card balances, student loans, medical or legal bills, and loans from relatives. After the debt question, we move on to questions that'll tell us about changes to the family's wealth accumulation since we last interviewed them 2 years ago. The questions apply to anyone who is in the family during the 2-year period, even if they're not there now. These questions cover whether the FU bought or cashed in any private annuities or IRAs, sold a home used as the family's main dwelling, bought or sold any real estate other than the main home, made real estate additions or improvements of $10,000 or more, put any money into a business or farm or took any out, or bought or sold any stock in publicly held corporations, mutual funds, etc. If the answer to any of these is yes, follow-up questions are asked to ascertain the amount of money they put into the asset or received from selling it. We also recognize that a family's wealth situation can change because of people joining or leaving the family. So the next questions address whether anyone who moved in or out of the FU brought with them or took out assets or debts whose value was $5,000 or more. Finally, assets can be brought into a family through gifts or inheritances. So we ask about inheritances if the value was $10,000 or more. Section W can be long or short depending on the financial situation of the family. A family with few or no assets may show some discomfort going through a long series of questions that they have to say no to. This may require some tact on your part. The one remaining part of the family assets picture that we still don't have at this point in the interview is information about the reference person's and spouse or partner's pensions. This is covered in Section P. First, you will ask a series of questions about the reference person. The application will then go through the same question series for the spouse-partner, although their answers may send them down different paths through the sequence. Section P is structured in 2 parts. The first part contains questions about any pension or retirement plan the reference person may have through a current employer or union. The second part is about any pension or retirement plan through a former employer. The reference person will only go through the question sequences that are relevant to his or her job situation. Reference persons who have never worked will skip out of Section P completely. Let's look in more detail at the first half, the questions about pensions through a current employer. The first question simply determines whether the reference person is covered by a pension at his or her current job. If they are covered, we begin with some basic questions about the plan. After that, we come to a very important question: how the benefits for the reference person's pension are determined. There are two basic ways of determining benefits in pension plans, which we refer to as Type A and Type B. The reference person will be asked different questions depending on whether he or she has a Type A plan, a Type B plan, or both. You should become very familiar with these types so you can record the respondent's answer as the correct type. Type A plans are defined benefit plans. They are based on a formula which may involve the employee's age, years of service, salary at retirement, or a combination of these factors. Type B plans are money accumulated or defined contribution plans. In these, the benefits are based on how much is accumulated in the individual's account. Accounts may go by different names, including 401k, 403b, ESOP or Employee Stock Ownership Plan, SRA or Supplemental Retirement Annuity, Thrift or Savings Plans, Stock or Profit Sharing Plans, or Money Purchase Plans. Reference persons with a Type A plan will go through one series of questions, while those with a Type B plan will go through a different series. Reference persons who have both will answer both sets of questions. In these cases, you will need to make sure that the amounts are not double counted. After we've seen how the reference person's benefits are defined, we ask a series of questions about retirement expectations. These are asked of all reference persons going through this part of Section P, regardless of the type of plan. We want to know things like at what age the reference person expects to start receiving retirement benefits, whether the reference person can estimate the amount he or she will get, whether the amount depends on Social Security benefits, and at what age the reference person expects to stop working. Finally, some people have another tax-deferred savings or compensation plan in addition to their main pension. Typically, this other plan is a thrift, profit sharing, or KEO plan. We ask if they have an additional plan, whether their employer contributes, and how much. This brings us to the end of the first part of Section P on pensions through a current employer. Now we turn to details about pensions through a former employer. Again, we want to know whether it was a Type A or B plan or both. Each type of plan will take you down a slightly different path of questions, but in general we want to know the following: the amount of the benefits the reference person had accrued when he or she had left the former employer, what happened with those benefits when the reference person left, the age of the reference person when he or she started receiving the benefits or expects to begin receiving them, and how much the benefits are per month or year, or how much they will be. Once we've collected details about the pension through a former employer, we ask whether the reference person has any other pensions through a former employer that they haven't already told us about. If they do, they'll be directed through the sequence about former employer pensions again. If not, you've come to the end of Section P for the reference person. At this point, the questions will repeat for the spouse or partner. Retirement pay can be a large part of a family's assets, so getting good information here is critical to understanding the family's economic well-being. The difficulty in this section is that many people, especially those far from retirement age, often don't know many of the details about their plans. Becoming familiar with the questions and informed about the information in the Cube IQs will help you collect the best information you can.